Hello everyone, this is Rakesh Kapilis and I welcome you all in my today's class and I hope you all are good at your homes. So as you know that we are on the way of doing the source of finance topic from business studies 11th class and in our previous lectures, in our previous videos we have gone through the very first source of finance, that was shares, and in our previous video we have also gone through what are the different types of shares, that were preference shares and equity shares. We have gone through all the scenarios relating to preference share and equity share. So now in our today's video we will focus on the second and next source of finance, which is under the category of borrowed fund or external fund, that is debenture. Debenture is another source of finance, and let me tell you the amount which a company used to collect by issuing the shares, whatever that is equity share or preference share, that amount is called share capital, while the amount of money which a company collect by issuing the debenture, that is called loan or that is called external debt, that is not part of the capital. So what is debenture? Debenture may be defined as an acknowledgement of debt taken by the company from public, and the person who purchase this, who buy this debenture, is called debenture holder. And the status of debenture holder is not of the owner, just like it was in case of share. He is simply a creditor of the company and he don't have any of the participation right in the management activity. He is just like an external body, external financing body. Debenture. Next, what are the different types of debentures a company can issue? The very first is bearer debenture and the another is registered debenture. When a company issue the debenture without showing the name of that holder on the debenture certificate, it is called bearer debenture, just like blank. And these type of debenture is being purchased by the investor just to resell them. His main purpose is not to occupy that to get the return, that is being just to sold. And in order to protect the, in order to save the transferring expenses, these debentures are issued without name. Registered debentures are those debentures which are being issued with a particular name. If I am purchasing the debenture, then my name will be put on the debenture certificate, that is registered, means those debentures are registered with my name. Second is redeemable and as well as irredeemable, what we have already discussed in the preference share. If the company is planning to redeem the debentures within its lifetime or within a specific time, then it is called redeemable debenture. While if company is planning to redeem the debentures not within its life, at the time of its liquidation, it is called irredeemable debentures. And let me tell you, no company prefer to issue the irredeemable debentures. Normally, a debenture is being redeemed maximum within 5-year period. Next is secured and unsecured. If any debenture is being issued by the company with a security, either fixed security, either floating security, it will called secured. If it is being issued without any security, it is unsecured. Next one, convertible and non-convertible. If any debenture holder having the right to convert its debentures into any another class, it is called convertible. If he having no right, it is called non-convertible. Let me tell you one more thing. When a person used to invest in the debentures, then the return what he get from the company out of company's profit, that is not called dividend, that is called interest. While the return what a shareholder get from the company, from the profit of the company, is called dividend. Now come to the advantages or disadvantages of these debentures. First of all, we will discuss the advantages of these debenture for the investor. If I am going to invest in the debenture of a company, what advantage, what benefit as an investor I will get? The very first, I will be given the regular income. Let me tell you one thing, the payment of interest to the debenture holder is the legal obligation for the company. No company can escape itself from payment of the interest by saying that this year we don't have the profit. अगर किसी कंपनी को किसी साल प्रॉफिट नहीं होता है, then कंपनी ये कह के बच नहीं सकती है that we don't have the profit, so that's why we will not pay the interest. Interest you have to pay in each and every condition, so that's why investor will get a regular return. While in case of shareholder, the shareholder will be given the dividend only if the company having the profit. Second is liquidity. The debenture is more liquid asset for the investor. It can be easily sold out in the market as compared to the share. Then it having a safe investment. If I have made the investment in debenture, then my investment will be saved. Why? Because normally the debentures are being issued against a security. So my money is safe. Now come to the advantage company will get. The very first most important, that is no interference. If a person is going to purchase the debenture, he having no right to interfere in company's any matter. So company will enjoy this situation. The second is it is cheap source of the finance as compared to share, because in order to issue the share we have to incur a big cost which is called flotation cost, but the flotation cost as compared to share in case of debenture is cheap, and the return normally as compared to share is normally cut low. So it is a cheap source of finance. Next, tax benefit. The amount what we pay to the debenture holder in form of interest, that is being paid before payment of the tax. So as the size of interest will be more and more, the remaining profit on which the tax will be charged will be lesser. So if we are paying huge amount of interest, it will somewhere protect the company from the payment of big amount of tax. Last is flexible source. It is a very flexible source. We can increase or decrease the size up to our requirement. If we are not in the need of so big finance, then we can redeem them. उनको पेमेंट कर दी जाएगी और वो लाइबिलिटी हमारी उतनी कम हो जाएगी. That is flexible source. These are the advantage. Come to the disadvantage. Debentures के कुछ नुकसान भी है. तो come to the disadvantage. First of all, I am talking about the disadvantages for the investor. I stand for investment. If I am the debenture holder, what disadvantage I will get? The very first, I will get less income, right? Because the rate of interest on debenture is normally fixed, while in case of shareholder, all the residual profit belong to shareholder. Less income. Next, they don't have any participation right, so they will not be able to know that how their amount is being utilized or used by the company, whether the company is using the amount collected from debenture holders in a proper way or in an improper way. They don't have the right to participate in any of the managerial activity. Then next come to the disadvantages for the company. It is a fixed burden for the company, because as I was already telling you that the interest payment is a legal obligation for the company, so it is a fixed burden you have to pay. It will not depend upon the size of profit. If the profit is not there, you have to still pay. If you have small amount of profit, still you have to pay. Whatever your profit will become the loss, but you have to pay the interest fixed burden. Then if company avoid such situation, avoid the payment of interest to the debenture holder, then a legal action can be taken against them. So in order to protect the company from any legal action, company should pay the interest on time. But it is a disadvantage because company have to be very careful from legal action. Claim on or on the asset, because normally, as I am telling you already, that these debentures are issued against a security. So if in any case company failed to pay the interest to the debenture holder, then they can claim on the assets of the company. So this is all about the debenture, its types, advantages and disadvantages. Now if we will talk about the difference between share and debenture, then how we can differentiate? The very first difference we can make on the basis of relation. What relation the shareholder and debenture holder possess. A shareholder is the owner of the company, debenture holder is the creditor of the company. Then in return, the debenture holder get interest, shareholder gets dividend. Third, redemption sequence. First of all, these debentures will be given their amount back, then the turn of shareholder will be there. Then next, participation right. Shareholder having the right to participate in all the matters, while debenture holder having no right. Okay, so these are the basis upon which we can differentiate the share and debenture. One more, you can say in that the amount which we collect from debenture, that is called the part of debt, or that is called the part of borrowed fund, while the amount what we collect by way of share, that is called share capital or internal sources. So this is debenture. Next, few small sources may be there. The very next is public deposit. Sometime company used to raise the loan from public by getting the money from public, and normally this is called public deposit, and normally the rate of return or the rate of interest on this deposit is smaller, greater than the rate of interest on the banks. This is public deposit. Then there may be some special financial institutions. There are some special financial institutions which are mainly framed by the government just to provide the finance to the companies. Like you can take the example of Industrial Development Bank of India. These are special. Then ICICI, which we have covered in the banking lesson, right? There may be State Financial Corporation, right? There may be Industrial Financial Corporation of India. These may be some of the, what you can say, financial institution which are there to provide the financial supports. The next in that category after public deposits and special financial institutions, there may be commercial banks like Punjab National Bank, State Bank of India, and other banks. These also provide different types of finance like bank overdraft, cash credit, short-term loan, etc., etc. So you can also add that is commercial banks, right? The last in that case, that is trade credit, very frequent, very common source of finance. What is trade credit? When one person buy the goods or services from another on credit, then that supplier or that you can say seller that provides some time to make the payment of that goods or services. So that time is just like a finance provided by him. Suppose I am buying the goods from Mr. X on credit for 2 months. So goods are being purchased today, but the payment I have to pay after 2 months. So it means 2 months period is being given by that supplier to me for the payment. That is called trade credit. That is very common and that is very frequent type of source of finance. So these are the source of finance a normal company used to adopt in order to meet its financial or you can say resources needs. Shares, whatever that is, equity preference, debentures, public deposits, special financial institutions, commercial banks, and trade credits. Okay, thank you very much.